Hello and thank you for joining us again. My name is Wesley Boudreau, one of the ExxonMobil focused financial advisors here at the Retirement Group. Today we're going to give you a quick update on the interest rates and how they're affecting your ExxonMobil pension lump sum conversion for the third quarter and the fourth quarter of 2023. Before I get started, just a quick reminder for those of you who do not know who the Retirement Group is. We are an independent financial advisory firm that has been working with corporate employees, mostly Fortune 500 companies, for a little bit over 30 years. Even though we have worked extensively with ExxonMobil, that does not mean we're employed by them nor endorsed by them. However, like I said, myself and some other advisors in the group have worked extensively with ExxonMobil employees, helping them transition into retirement. So if you have any questions surrounding the pension plan we'll talk about today, the 401k plan, healthcare, retiree medical benefits, things of that nature, life insurance, any questions, just give us a call. We'll be happy to go through that. Now, at the end of the day, we do have offices throughout the country, so rest assured if you need to sit down with somebody face to face, we can probably still accommodate that. But obviously, this day and age, especially post-pandemic, it's very easy to have web meetings, phone calls, email communication, whatever you prefer. Just let us know. We'll be happy to communicate with you that way. If you haven't done so, or it's been a while since you've done so because we've seen a major change in markets and interest rates over the last few years, go ahead and take us up on our complimentary cash flow analysis. This is not an ordinary cash flow analysis. This is a detailed financial plan specific to your ExxonMobil benefits, with the ultimate goal there to kind of help you determine the best day to retire so you can maximize your benefits when you do leave the company. And obviously, we're going to talk a little bit today about the pension interest rates. If you're thinking about choosing a lump sum, then that's definitely one aspect of this cash flow analysis where it may make sense to hang on for an extra quarter or 2 quarters, or maybe go earlier than you expected in order to maximize your pension lump sum. There's also different options as far as understanding your bonus pay and things like that and matching on the 401k plan. But at the end of the day, we can run that review to show you the best time to retire so you can maximize those benefits. And we can also model various scenarios. Maybe you say, hey, I want to retire at 65, but if I could go at 62, could I? We can run those, look at all your different scenarios and help you determine the best day to retire, as I said. And then go from there if you have any questions on allocation help or things like that as well. So let's go ahead and get into the pension plans. We'll make this short and brief, just give you a quick update of where the interest rates are and what's happening right now. But a quick reminder, the ExxonMobil pension plan is still a classic defined benefit plan, in which case there's a formula base in order to determine what your single life annuity is going to be. Now, from that point, everything else is derived from that single life annuity. So they take a look at your final average pay, and they look at the 1.6% multiplier times your final average pay times your years of service, and then subtract out a Social Security offset in order to get what that single life annuity is. So let's just say, for the sake of argument, maybe that single life annuity comes out to $3,000 or $4,000 a month. That is what you're going to get for the rest of your life. Now, if you want to deviate from there and do a joint survivor, which you can do to cover your spouse at various levels, 25, 50, 75, 100% continuation, you can do so as well, but now it's paying off of 2 lives, so the payment will be smaller than that 3,000 or 4,000 I mentioned, because Exxon's on the hook for a potentially longer payment. There's also the option if you want to take a lump sum, which is what we're going to talk about today. And back in, I think it was 2015, they made a great change to the pension plan, in which case they will allow you to kind of mix and match that. Most companies, it's either one or the other. You take the lump sum or the annuity. With ExxonMobil, you can break that up in 25% increments. So you could go half and half on the lump sum and the annuity, or 75%, 25%, one or the other if you like. That another reason is why we talk about that cash flow analysis, where we can model those various scenarios, whether you want to go all lump sum, 50-50, or break it up in a different aspect. We can go through all those options with you. So what do these interest rates on the screen mean to you? So keep in mind, generally speaking, what's going to happen as interest rates change, so will the balance of your lump sum. So if we look at the seesaw pattern here on the screen, whenever interest rates go up, which they have been for the last year or so, you're going to see your lump sum actually go down. The opposite took place during the pandemic. We saw the Fed drive interest rates really low, lower than we expected. And so by driving those rates down, it raised your lump sum to the highest levels we've ever seen. We knew the rates were going to go the other direction and come up, and we'd see lump sums drop. We had a lot of conversations with individuals about whether it made sense to retire earlier or not in order to take advantage of this. And then we knew the rates were coming up. We didn't necessarily know they'd come up as quickly as what they did last year in 2022. But that sharp rise obviously did a number on the bond market, did a number on the stock market as well, and definitely did a number on your pension lump sum calculation, where in some cases It used to be, I don't want to call it a no-brainer, but most people, I'd say 90% or so, were leaning towards a lump sum in the last couple of years, where now it becomes more of a toss-up, where that annuity may make more sense for you. But no matter what, it's important to review those side by side. So again, these rates I'm going to go over as far as the interest rates only affect the lump sum, no bearing on the annuity. The annuity is going to be a fixed payment for the rest of your life. So again, it's important to review those side by side. So how do these interest rates work? Well, ExxonMobil's got a couple different interest rates they use depending upon your age. If you are actually a grandfathered under the GAT rate, that's actually for individuals that have been there a little bit longer. The actual cutoff is if you were 65 with 25 years of service by the end of last year. So again, the end of 2022, you need to be 65 with 25 years of service. Then you use the GAT rate, which is the rate I have on the far right-hand side of the screen. That's going to actually look at the average of the 30-year Treasury multiplied by 95%, rounded to the nearest quarter point. So that's going to historically and always has been a lower rate than what the PPA segment rates are, which in turn generates a larger lump sum. So again, if you have questions on that, just give us a call. We can go through that with you. But for most people at this point in their career, they're going to be, probably under 65. So they're going to be under the PPA segment rates, which came out in 2008. So the segment rates, there's a first, second, and third segment. First segment correlates to the first 5 years retirement, second segment for years 6 through 20, and the third segment for years 21 and beyond. So for most of us, that second segment has the highest weighting, so we'll focus a little bit more on that when we have this conversation because that captures 15 years of retirement. Again, if you got a life expectancy of 30 years, that's half of your retirement picture. If you got a life expectancy of 25, it's obviously a little bit more than half there. So that's going to be one of the higher weightings when we look at this. So what Exxon does is they update these on a quarterly basis. Again, some companies do it monthly, some do it once per year, but Exxon does it quarterly. And they go back and look at the average of the last 2 months of the prior quarter to get that. So if you notice on the screen, we've got the averages for May and June in order to give us what the fourth quarter interest rate is going to be. The averages for February and March is what gave us the third quarter interest rates. Now, if we look at this on this screen, let me kind of zoom in here so it's a little bit easier for most of us to see here. We can look at the average for May and June gives us the fourth quarter rates of 5.09%, 5.19%, and 5.25% for the first, second, and third quarter. If you were actually pulling the trigger and going in the third quarter instead, it's 5%, 5.16%, and 5.06%. And the GAT rate for both of these is going to be 3.5%. So no change there for the GAT rate. What you will see is a slight uptick in the interest rate for the third quarter to the fourth quarter. So what that means is that interest rate increase is going to decrease your lump sum, everything else held equal. There's other variations as far as how old you are. Age 60 is about the sweet spot. The older you are, the less those interest rates will affect you. The younger you are, the more those interest rates will affect you. There's also the aspect of what percentage of your pension you get based upon your age. So we go through all this with you in greater detail on our reviews. But that interest rate change, not that much on the second rate, a little bit more on the third rate and the first rate. So again, there's going to be a slight drop in your pension lump sum, probably from quarter to quarter, maybe 1 percentage point or something like that. Not too big. The question is going to be really, where's this trend? We saw actually the interest rates kind of cap out in October of last year. That middle segment was 5.83%, so that hit almost an all-time high. You have to go back to, I think it was 2009, where we had a 5.95% in there. So getting very close to the historical highs since the PPA segments have been enacted in 2008. But since that October, we've had a decline, got down to just the high fours, and now we started upticking again. Whereas again, we look at 5.15 and 5.23 in May and June. So if we continue that trend, then interest rates could continue to higher, and you could have a lower lump sum in first quarter of 2024. We won't know that for certain until we get to October, and once they release the September rates. So we'll have again the August and September rates to give us those averages. So just kind of going historically, we've gone up and down with these interest rates the last couple of years during the pandemic, the lowest interest rates we've seen. We're getting back up to the kind of the highs we've ever seen. I've actually, maybe too much information, but I like to run kind of a spreadsheet on this, and I've run like an average if you had a 25-year life expectancy versus 30-year life expectancy and how those segment rates play out. And we're actually now about the numbers in for June came out like the 6th or 7th highest ever in the history of the PPA segment rates. So we're knocking on that door of the historical highs, but hopefully we'll see these come down in the future. And so again, if we start seeing interest rates go the opposite direction, that's going to be a benefit for you staying on quarter by quarter to raise your lump sum calculation. So a lot of information went through there, but ultimately, like I said, the easiest way to go through this is we can walk you through how to run a pension projection through ExxonMobil, or if you get your year-end summary statement, it'll give you some of that information, but it's best to run that that specific example. Then we can help you go in there and model different interest rates to see how that affects you. But at the end of the day, the best way to really tie all this together is to run that cash flow analysis I mentioned. Again, a lot of you may be thinking lump sum, lump sum, lump sum. That's what everybody's told me. Again, that's because the last couple of years interest rates have been low, and it's been very beneficial to take the lump sum. That may or may not be the case going forward. So again, it's important to run that cash flow analysis side by side, see how your personal situation plays out, and what's better for you over the next 10, 20, 30 years in retirement, whether it's the annuity or whether it's the lump sum. And again, we'll go through that by running the cash flow analysis. So again, any questions you have, just feel free to reach out to us. There's a couple QR codes on the screen. One, you can schedule an appointment with myself or one of our other ExxonMobil focused advisors. Those appointment calendars, I think, go about a week out. So if you need something sooner, just give us a call or email us. And there's one to follow us on LinkedIn. So if you want updates on interest rate changes, company plan changes, things like that specific to ExxonMobil, we'll get that over to you as well. But any questions, always reach that 800-900-5867. And again, you can also email us at info@theretirementgroup.com. I want to thank everybody for joining us today. I know we kept this brief. This is really just an interest rate update. But again, just a quick reminder, even though myself and the other advisors here have worked extensively with ExxonMobil, that does not mean we're endorsed by them nor employed by them. But again, should you have any questions on the interest rates or anything beyond that with the ExxonMobil plans, and especially transitioning into retirement and understanding that transition, just give us a call, 1-800-900-5867. Thank you, and hope you have a great day.